Hey everyone, welcome back to the channel. Today we're diving deep into a major update surrounding Datavault AI Inc., NASDAQ Dvlt, a company that's been gaining serious momentum in the AI, blockchain, and real-world asset tokenization space. There's a lot happening behind the scenes. And if you're interested in emerging tech, decentralized finance, or companies preparing for massive growth, this breakdown is going to be extremely valuable. So let's jump straight into it. Datavault AI just announced a huge spike in revenue coming from its audio technology division. This unexpected jump is not just a small bump, it's signaling a much bigger wave of activity expected later this year. The company is openly projecting that its flagship Datavault platform will see explosive adoption in the fourth quarter, which could turn out to be a defining moment for their entire business model. But the real shocker came when the company revisited its future financial expectations. Datavault AI raised its 2026 revenue guidance from $50 million to at least $200 million. Yes, you heard that right, a 4x increase in future projections. This isn't a small adjustment, it's a statement that they believe the opportunities in data monetization, tokenization, and AI-driven platforms are expanding much faster than initially expected. A key factor driving this confidence is their growing network of heavyweight partnerships. Datavault AI is collaborating with major players like IBM and Silex, which is giving them access to advanced technological resources, enterprise-level clients, and a much larger global footprint. These partnerships aren't just symbolic, they're strategically strengthening Datavault's core ecosystem and pushing them into bigger markets. On top of that, the company recently secured a $150 million strategic equity investment, which massively boosts their financial flexibility. This capital is expected to fuel global expansion, accelerate product development, and strengthen their international exchange roadmap. For a company still in its early NASDAQ years, this level of backing adds significant credibility. Speaking of exchanges, Datavault is building multiple tokenomic exchanges across different industries, including a specialized biotech-focused marketplace. Their goal is to merge blockchain technology with advanced AI systems to manage yields, verify product origins, and streamline data attribution. This could open entirely new revenue streams as more real-world assets move into tokenized formats. However, not everything is smooth sailing. The company openly acknowledges several challenges. Revenue recognition in Q4 is expected to be tricky, mainly because they're onboarding new partners, expanding internationally, and dealing with more complex accounting systems. There are also legal and governance hurdles tied to launching and operating their international exchanges, especially in countries with strict regulatory frameworks. Another challenge lies in the fact that 2025 marks their first year on NASDAQ, which means they're still establishing credibility, building investor trust, and managing the pressure that comes with being a publicly traded tech company. Their ambitious revenue targets might be difficult to hit unless execution remains extremely strong. There's also dependency on partnerships and outside investments. If any major partnership weakens or fails to produce results, it could create unexpected risks for the company, something investors need to keep an eye on. Now let's talk about the company's recent Q&A highlights, which give us more perspective on where things are headed. The leadership team emphasized that their tokenization strategy focuses on high-value global assets, things like gold, diamonds, copper, and even geothermal projects. They also mentioned that they've opened opportunities for a Swiss-based exchange, and their top priority is tokenizing assets that can begin generating real revenue in the current year. Geothermal assets were specifically highlighted as a major area of expansion. Management explained that the $200 million projection is meant to motivate the team, though they aim to stay conservative and realistic. They're working closely with international auditors and implementing sophisticated systems to ensure accurate revenue tracking. Q4 is expected to be demanding, but they're expanding development centers worldwide to keep up with fast-growing demand. Datavault AI says its data refining process is designed to be extremely low cost, allowing their tokenization exchanges to potentially achieve margins as high as the upper 80% range. When you combine all business segments, they anticipate overall blended margins between 55% and 60%, which is strong for a company still scaling globally. The $150 million investment from Silex is essentially locked in, pending a shareholder vote. By the end of the year, they expect to hold over $125 million in liquid assets. They've also removed previous convertible debt, leaving only strategic acquisition-related commitments. The company clarified that the Silex-related Bitcoin holdings function as liquid cash, just with more volatility. There are no restrictions on how they can use it, meaning they can convert or deploy those funds whenever necessary without raising additional capital. This is not financial advice.